Ladies and gentlemen, we move on to our next panel, the backbone of any economy for that matter, not only Indian, the backbone of the infrastructure, the backbone of the digital ambition. For any growth, ladies and gentlemen, we need money. And when we talk about money, how can we ignore the banking and financial services sector, the insurance sector, accompanied, of course. Our next panel, ladies and gentlemen, is the banking and financial services space. I'm joined by Ms. Radhika Rao, who's a senior economist at DBS Bank. I'm joined by Sarbvir Singh, who's the CEO at policybazaar.com. I'm joined by Roopam Asthana, who's the CEO and director at Liberty General Insurance. And of course, I'm joined by Praveen Sinha, who's the founder and MD at PinCap. Gentlemen, let me give all of you opening remarks. I give the stage to you. Your opening remarks on the budget 2022 as far as the BFSI sector is concerned. I'll start with you, Sarbvir Singh.
Thanks, Abhinav, and good to be on the panel and good to see everyone. I think as you know, the budget was presented just a little while ago. So based on what I've been able to read and understand, I think there are two things which are very important. At least for me, one thing which has been very good is that there is a vision, that we are talking about for 25 years. So I think more and more, budget statements are becoming blueprints for the future rather than just, discussing what earlier was perhaps there was a lot of minutiae that was discussed. And now I think that these are becoming blueprint and vision documents, which I think is very positive and is very good. I think the second thing for me, which was a great takeaway, was the fact that the government is is increasing the capital expenditure by 35%, and is really focused on infrastructure. Because to be honest, I believe that the role of a government is exactly that they need to focus on the infrastructure, healthcare, education, etc., the building blocks of the economy, and let the private sector and others, focus on the business and other areas. So the more we can improve our roads, electricity, healthcare, education, I think the more, the private sector can do its own thing. And, because the businesses involve success, failure, everything. But I think the building blocks need to be there. So I'm really happy to see that a lot of money is being spent. And most importantly, I feel that as we see over the last few years, the money is being spent effectively. As in, the roads are coming up, travel times are getting cut, connectivity is better, electricity is better. So I think these are all real changes, and I think the outcomes are following the outlays, as it were. The third thing, I guess, just speaking from a more narrow insurance or financial services perspective, I think the digital rupee, of course, depending on how it's implemented, but that is a major step forward, right? I mean, there are, at this point in the whole world, actually, there is nobody who has a digital currency. And so I think if we are able to issue a digital currency next year, then I think we are way ahead of everywhere. And frankly, with UPI and other things that are already there, I think this digital rupee can build on that whole thing. And just the last thing I would say on the healthcare side, I think the focus on the National Digital Health Mission is very important. And I think if this mission can be implemented and, as we start to, then we will be able to see many, many benefits of it. Narrowly for our insurance sector, I think it will make health claims a lot easier. It will make health underwriting a lot easier for both health insurance and life insurance. So we're really happy to see that.
Okay, digitalization and capital expenditure. Praveen Sinha, opening remarks from you.
So, thanks for inviting me, Abhinav, and nice to be part with other co-panelists. My takeaways are that the budget was overall did not come out with any kind of a strong positive or negative surprises. So it was more digestible. And one big takeaway for startup community is definitely the cryptocurrency or digital currency. At least it has been given legal, I would say, boundaries so that it can operate, though the taxation, etc., keeps it in a way where not people invest aggressively.
Okay.
The thing which I found was that startup tax incentive will be increased for another year. So if startups are registered for one more year, they will be considered for that scheme. And one more, it's more like fortune teller, Abhinav. If you remember, a few weeks back, you asked me what is my ask. And I had suggested IBC modification. And if you see, there is a statement in that direction that it needs to be revived, not revived, but some kind of design changes needs to be done to bring back the efficiency that it was designed for. So broadly, I think it's a good budget. And as Mr. Sarbvir had shared, the good part is that the budget has started moving from being operational and transactional from to strategic and what we envision in coming future. And if we keep doing it in few years, I think the roadmap will come out, because these results don't come immediately. It takes time, but those designs and those policies needs to be implemented and rolled out. So broadly, I will not say super positive or super not negative. It's a mix for me. Overall, no surprise is a good way to see the budget.
Sure. Now, Sinha, not only domestic IBC, but we've also taken it to cross-border insolvency. तो शायद वित्त मंत्रालय ने आपकी हिदायत को ज़्यादा ही seriously ले लिया. Coming to Roopam Asthana. Roopam, your opening remarks, please.
Yeah, hi Abhinav, and thank you for inviting me to this panel. So I think I agree with Sarbvir and Praveen in that this is a forward-looking budget. And I think, the emphasis that it is laying on the new economy and the digital economy is quite clear and apparent. So be it the health ecosystem, be it the payment ecosystem, be it the focus on the fintechs and the startups, be it the focus on EVs. So clearly it's a very forward-looking budget, which is now trying to set the path for taking India into the next phase of growth. So I think that is a clear indication that we are getting from it. The second, and for me, the more important part is, how does the budget look to create jobs and put more money in people's pockets, so that they are able to participate in the growth that is coming, that should hopefully come ahead. And I think the extraordinary amount of money that has been allocated to capital expenditure is, in my view, a kind of a Kickstarter to the virtuous cycle, which should hopefully lead to more private investment coming up and more job generation. And I think, to me, that is a very crucial component of the budget, and how that translates into more jobs and more money in people's pockets is something that will be watched very, very carefully. As is the case with every budget, I think execution is going to be key here. And while the amounts have been allocated, how that is spent and how quickly that is spent will be absolutely important, because there is always, some level of lag between, government capital expenditure translating into more jobs and money in people's pockets. So for me, I think this is, again, a budget which is not just for 22-23, but also for years in the future as well. And I think some of the areas, coming very specifically to how it impacts insurance. Something which is going to really make a difference is the kind of investment that is going on in infrastructure. So be that road, highways, ports, airports, etc. That will all translate into asset buildup, which will require insurance. So that clearly is a positive. The second is the road network. The more roads we have, the more people will buy automobiles. And I think that is another positive for the insurance business. The third indication for the insurance business came in the form of emphasis on EVs. And I think that is a clear indicator for insurance companies to see how to basically go about insuring these new class of vehicles that are going to come up. There was another mention which the finance minister made, which was again, it could be a game changing, was in terms of surety business and how sureties can, in a sense, take the place of bank guarantees, and now for government contracts as well. So another opportunity for the insurance industry overall. For me, from a disappointment point of view, was the fact that there wasn't anything specific on health insurance, which the economic survey talked about, the low penetration. So I think that was a disappointment. The second was, I think, the poor state of the government-owned insurance companies. So there was hope for some, allocation for additional capital for these companies, or at least a clearer roadmap in terms of where, they need to be taken. that unfortunately did not get spelled out. So positives and negatives, but I think overall a very positive and a very forward-looking budget which focuses on sunrise sectors.
Well, you already took away the answer from my next question, Roopam. Apart from the negatives you mentioned, of course, health insurance, I was about to ask you, the vacant positioning at IRDAI, which has been, the post has been vacant for the last 6 months. I think that could also have been one of the commitments made by the government. At this point, I would like to bring Radhika Rao. Radhika, your opening remarks for the budget as far as the BFSI sector is concerned.
Hi, Abhinav, let me wear my hat, the main hat of being an economist. And, the initial part of my comments would be on the economic assumptions. Every year when the budget is outlaid, you immediately do look for what is it based on. So I think in terms of the fiscal 23 budget, you do see that there are still, there is better credibility in the numbers and the breakdown, something that you had seen in fiscal 22 as well. So if you see the growth assumption, it's in the low, about 11-12%. If you see the divestment target, it's much more realistic, right? We have been seeing 1 trillion or 1 lakh crore plus targets for the past few years, and then we end up probably meeting less than half of it. So this time it's well below that. So it's relatively, again, realistic.
You think it's far more practical?
Absolutely. If anything, we could have an upside surprise, right? If BPCL goes through and LIC goes through, some of the privatization, bank privatization that's on hold yet, that goes through. So after a long time, we could see actually an upside surprise. And then with the revenue assumptions. So, the year that we are in really did see a very sharp increase in the income taxes. But going into fiscal 23, I think the tax buoyancy, which is estimated, is also less than 1, given, if you take direct taxes. So again, more realistic. So I think that way, most of the math to us speaks well. Of course, underlying all of that is that deficit path. Consolidation is very modest, right? So two ways, some would say that you don't have to really consolidate too fast. These are very difficult times. But I think we need to have a path, and the path that is drawn towards 4.5% by 25-26 means we need to have at least 60-70 basis points of reduction. So the longer we delay that, the longer the path. In terms of the measures in particular, I think most of the other speakers have already mentioned. My couple of takes would be that I think it's traditional sectors, CAPEX, infrastructure, front and center. I think that was underscored by the fact that the finance minister started talking about it, very early on. Usually you talk welfare first and then infra. This was the infra first and then welfare, which shows you, where the momentum is. And that followed by the new age priorities. So if I talk about in particular the sovereign green bond, I think that's extremely exciting, right? So which tells you do have a financing need. And you tie that in with the financing mode as well. So you don't have to, again, worry about where's the money going to come from. So that's a one-on-one, I think. And the other one is digital rupee. We do see many of the major economies who have already started pushing towards it. So I think India is joining that race as well. And it's important because there was one of the surveys that the central bank had done, which showed that while there is higher digital adoption, our cash usage is also very high. So the digital rupee is not intending to take over that, cash usage. It only means it's going to be a more secure, hopefully more anonymous mode of digital usage, and thereby less hoarding, less, spillage and all of that. So among all of these forward-looking priorities, I would think these two were quite exciting, something that we are awaiting details of in terms of the size and the scope.
Sure. Thank you. Now, moving on to the next part, I'll dissect this into individual, topics. Sarbvir, I'll come to you. A big roadblock for the overall sector, banking and financial services, has been lack of credit opportunities for the MSMEs. And also MSMEs have been a little shy of borrowing more from the market or from the institutions. Do you think that budget has addressed that problem substantially? Although there have been a special mention about the infrastructure, highway expansion, road expansion, but do you think this will let MSMEs come out of their shell and borrow more money in times to come?
So I think, Abhinav, there are two ways of looking at it. One is that, as you know, right, MSMEs are finally part of the economy. If the economy starts to do better, then they are in a better position to, take credit and pay. So what is the challenge for MSMEs? The challenge for MSMEs is that over the last 2 years, especially, their problem has been that whatever credit they had, right? And there have been various schemes of the government, and recently, we have this credit enhancement kind of scheme, which was extended as well. So I think the schemes do exist. The problem is that if there is not enough income that these MSMEs are able to generate, because they do end up borrowing at pretty high rates, right? Even in today's day and age, they are borrowing in the mid-teens, right? So the problem for them is that they have to make money in the mid-teens to pay that off. And I think if the overall economy starts to do better, then they are always in a better position to sort of from a demand for credit perspective. I think from a supply for credit perspective, there are a fair number of schemes. There is this credit enhancement scheme, etc., which exists to drive or to help them, borrow more. I mean, one can always ask for more, and one can always expect more schemes. But I sort of honestly believe that the better role for the government is to enable the economy to do better, and which is exactly, I think, what they're trying to do. They are saying that private capex is not really recovering or not coming up as fast as one would like or whatever. So they're saying, okay, let us first show the way, and hopefully, as they build this capacity, then the private sector will also eventually step in. So I think the MSME situation is nuanced. It is still a tough time. COVID has been a big problem for MSMEs, and there are some schemes, but again, overall recovery of the economy, I think, will be the best driver for the MSMEs as well.
Okay, I see. Overall recovery of the economy will be a more driving factor. Praveen?
I'll add to what Mr. Sarbvir had shared. See, there are operational initiative that has been taken, and one of the critical issue that MSME face is timely payment of their dues. Our cycle or contract is not yet respected to an extent where when I sign a contract that I'll pay in 45 days, the payment comes in 45 days. Larger the player, larger the informal credit that they take away from the MSME.
Okay.
Many initiatives have been taken in that direction. There are portals where you can trade or you can buy and sell your invoices. But generally, AAA rated companies go there, and government is pushing the PSUs to get listed there. But it has not moved in the direction. Again, the policy was excellent, but PSUs are taking time because their ERP is not ready, etc. So if you see operational aspect, again, this budget has shared that there will be an integration of different schemes that MSME has. So I think how much incremental value it will generate, that I'm not sure of. But if you can just ensure that even public sector or government-related companies are compulsorily listed on those trading platforms, most of the SMEs, MSMEs will get their timely payment, because then you can exchange immediately. Your working capital get fulfilled. Second, if you see, there is a huge investment budget from the government side. So possibility of MSME entering and capturing that revenue is quite high. So you solve those two problems immediately. And if you see in the budget, those operational points are discussed. Now, how effectively can we implement is going to be the main issue. Now, on the second aspect, I think there are certain industries and sectors that are deeply impacted. But I have no suggestion that what government could have done, but travel, tourism, hotel, restaurants, cafe are deeply impacted. So there was a generalized credit enhancement scheme, which actually helped a lot of SMEs and MSMEs. So some think tank would have come out with a solution where most of this ecosystem is not collapsed. Is there a way to handhold, etc.? So I think that could have also, because there is one is a generalized approach that all SMEs and MSMEs are alike, but it's not the case.
Okay.
MSMEs are doing really well, some are doing average, some are doing bad, and some are at the brink of collapse. So multiple pronged approach and strategy, and in fact incentive, would have helped significantly. And see the from the government side, already Mr. Sarbvir has said there are already many policies which MSMEs can utilize, so we don't need to add to it. This budget has probably focused more on rural and agricultural aspects, and there are many SME, MSME in that segment as well. So that I think will get us significant push if this.
And that includes financial support to farmers who want to, go and set up agroforestry businesses.
So it's a trigger for creating a lot of SMEs and in fact increasing the income and revenue as well. And this is the sector where credit always is not easy. So, and if you see even the unsecured interest rate are in the range of 16 to 22%, and there's no way that a bank without collateral will give you the line. So such segments will get advantage if they come under those I would say guidelines and incentive that has been introduced. And more segment where MSME can come, which is related to startup as well, is the drone manufacturing. So drone manufacturing, if India can become a hub and if the right ecosystem is established, currently every production house is in China. So now if government has focused, can we become the global delivery center of manufactured drones? So if that kind of vision is implemented, it needs that ecosystem. The support has come, the policy has dictated. Make in India will ensure that there is a lot of domestic demand. But if the right set of policy makers and implementers are there, it can become the global hub for delivering manufactured drones from here.
Radhika Rao, the government did focus on a lot of MSME portals to become interlinked, and the biggest aim was credit facilitation. Do you think it's a step in the right direction and it will solve the problem? Radhika Rao, can you hear me?
Yeah, I'm on mute, sorry. So certainly, I mean, MSMEs, I think we can't, dismiss the big role that these companies play in the larger ecosystem. I mean, they make about a third of growth. They employ about more than 100 million, workforce. And the government's trust area in the past few years, particularly, I think they were the most affected during the pandemic as well. So the idea to get more credit directly to these companies is certainly a move in the right direction. But I would also expand that to mean that, the broader landscape in terms of the, framework that the companies work within, that also the ease of doing business for them as well has to improve in terms of, higher, besides capital, also in terms of infrastructure and rather larger policy support, which will, I think, right now we have pretty much caught up with what is happening in the pandemic, but some of these problems did persist earlier on as well. So I would expand that to not merely financing, but non-financing support as well. And that should, even when we are out of this and these particular credit schemes that have been extended in terms of money, in terms of timeline as well, the broader support needs to come in by way of policy push, not just credit. Okay.
Roopam?
Abhinav, in my view, I think there are two parts of the life cycle that the MSMEs have to kind of work through. First is the sustenance bit, and I think Praveen hinted at it, saying that there are a lot of the MSMEs that are actually struggling to survive today, and I think that segment is in dire need of credit to be able to ride through this current situation. I think that issue is partly addressed through some of the credit guarantee programs that are there, but I am fearful of the fact that I don't think the banks have very openly gone out and actually dispersed credit over there. Actually, if you look at it, be it the NBFCs or the banks, they have become much tighter in terms of their credit appraisals at this point in time. So I think the schemes are there, but I'm not so sure that they are actually translating into available credit for these MSMEs to be able to survive right now. And so that is the current focus that I think is required at this point in time, which is partly addressed, but largely execution has not been up to the mark as far as that is concerned. The second bit is what Sarbvir and Praveen were also talking about, saying that once the large capital expenditure that the government is talking about starts to trickle down to the private sector and thereon to the MSMEs, is when they will need credit for growth. And I think that is something which I'm a lot more confident about, because growth related credit is something which the banks have always been very keen to do. And that has been the bulwark and the supporting structure for the MSMEs in the past. So that aspect is, but I think the second aspect, which is the growth aspect, is something which is going to come in the future, and I think the budget is actually targeting that. And there I don't see real issues in terms of credit availability for MSMEs. So I'm very confident on that, but I'm still very skeptical of a large number of MSMEs actually surviving through this current period of revival.
Okay. Now, Sarbvir, I'll come to you. KV Subramaniam, in his recent report, and this was about a couple of months ago, he mentioned that Indian banks and insurance companies are lions locally and lambs globally. Because they're not able to expand their footprint, and they're just able to narrate their vakya, for the lack of a better English word in my mind, to the customers globally. Do you think that certain policy deficits like health insurance, which Roopam mentioned in the beginning, could have found space? Because globally we are a very under-penetrated market when it comes to not only health insurance, but also life insurance, or maybe mutual funds for that matter. Do you think something could have been done on the budget, or am I asking too much?
No, Abhinav, I think all of us, and honestly, first, if you just take, because see, if a person from the insurance industry says something, then it looks a bit self-serving. But if you remove that out of it, the 25,000 rupee limit that was kept was started 7 years ago. Now, in 7 years, the cost of, inflation, etc., has come up. I think in the last 2 years, consumers and all of us have learned that healthcare is, health insurance is more important than ever. And secondly, the cost of health insurance, healthcare has gone up. So I think there's every logical reason to have increased the limit for health insurance, both for families and as well as for parents, because that's where the cost is today. And we all understand that having inadequate health insurance is of no use, right? Having health insurance for a few lakhs, especially if you live in a metro city, is practically meaningless. So I think that would have been a very good step. And as you mentioned, that it would have helped us, have extend health insurance to a lot more people, because like it or not, people do buy insurance because of tax benefits. And I think for whatever reason they buy insurance, it's a good thing to do. And I think that would have helped them. So definitely we would have liked that. On the life insurance side also, I think it is time that we recognize pure protection, which is term insurance, and annuities as a separate category. Because the reality of life is that now more and more people are in the private sector. As they retire, etc., they were not going to have a safety net in terms of pensions and things like that. So they need these instruments. And I think, don't want to get into too much detail right now, but the reality is that why annuities, which are based on taxed income already, should be taxed again, is not a very logical thing. So yes, I do wish that there would have been some of these factors would have been taken into account, and I think insurance could have been given a push. But of course, we also understand there are many priorities, and I'm sure they're trying to balance the budget deficit, etc. So probably there was not much room. I just want to make one small comment on the first part of your sentence. Where you said about local versus global. See, the reality of that is that first you have to have a strong domestic market. You have to do really well in your domestic market before you can go out. So the global giants that we see today all originated because they had a strong domestic market. And China is a very recent example, right? Where insurers, because of the size of the domestic market, grew large, and frankly, they're still mostly Chinese, but still they have that scale now. So if you ask me, the way to win the world is to win your own country first, and to have a large domestic, vibrant domestic insurance business or a banking business, and then I think go abroad. Because these are local businesses, just generally going abroad for the heck of it doesn't necessarily lead to any value creation.
Well, that will take us to the discussion of financial inclusion, which I'll come to later. But before going to Praveen and Ms. Rao, because they would not specifically answer question on insurance, I'll ask you, Roopam, especially on health insurance part. Do you think, because over the we were expecting more spending on the healthcare sector, more than 3% of the GDP, considering the recent COVID crisis. Do you think something more could have been done on the insurance part, especially health insurance?
Yeah, so if you look at it, Abhinav, you're right that I think there was more expected in terms of government's allocation towards the health infrastructure. But it seems to me from the comments that, they believe that, what has already been done over the past couple of years should actually, help them tide over the current issues that are there. So I think that's a miss in my view. I think the second is really kind of in a sense, what Sarbvir said is that, the expectation was that considering the low penetration of insurance in general, and, we tend to overlook the fact that when we talk about, general insurance penetration in India, we say 1%. And but the fact is that actually, if you look at it, there is wide disparity in penetration in the big cities and in small town India. And the penetration in small town India is substantially lower. And I think that tends to get overlooked in the whole discussion on averages. And therefore, the expectation that, there would have been some more incentives provided to both the individuals as well as to the employers.
But Roopam, low penetration of insurance in small town is also because of a lot of frauds prevalent in the space. I mean, at some point, the industry also needs to have a self-appointed mirror, which, can tell the truth. You cannot blame government for everything in this.
No, it's not a question of blaming the government. I'm just stating a fact. That there is low penetration. Now, it could be for various reasons, and we need to go into the depth of those reasons to see how, we can actually make that happen. So let me give you a very simple example, pointing a finger at us, the insurance industry. 70% plus of the Indian population lives in villages, and actually probably larger percentage if we include smaller towns as well. But if you look at the concentration of physical branches of insurance companies, 70% of those are actually in the bigger cities, right? So clearly we are there to blame as well. So, if we can get into that discussion also, but, just kind of wearing it back to, today's discussion and the context for today's discussion. I think there was an opportunity for the government to look at some more incentive to be provided both to the individual as well as to the employer, in terms of helping them get their employees, and for the individuals in their own attempt to get larger health insurance coverage. So I think that is one area that could have possibly been looked at. Actually, if you look at it, the allocation to the Prime Minister's health scheme, and if I remember a very cursory reading of some of the numbers, the allocation has been increased a little bit. So that's one area that I think. The other thing which I am a very, I'm a believer in is that insurance is a wonderful way to actually pass subsidies to those who are really impacted. And I think another area which has been overlooked is the whole issue of global warming and the increased frequency of natural catastrophes, which common people and poorer people across the country are facing today. And insurance as a tool to be able to pass that subsidy to the affected people is something that could have been worked on, especially to help those who are impacted at time of these natural catastrophes. So a public-private participation in that, some kind of a insurance kind of coverage scheme where the insurance companies take, say, 80% of the hit, and the government then subsidizes it to the extent of, say, 15-20%, is something that could have helped. Today the insurance industry is actually crying out because of the large number of COVID claims that hit the industry. So while the banking industry got some relief on account of COVID, the insurance industry, which took a huge hit on account of COVID claims, did not get any support from the government, and all of it has been absorbed. So, clearly, one has
That's a fair point.
One has to look at how, you can actually, help the private sector do more.
Yeah, a lot of, in many countries, government did back up a lot of insurance claims which were spinned out at the times of COVID, not the Indian government for sure. So you're bang on there, Roopam. Radhika, I'll bring you in. Now, when it comes to financial inclusion, digitalization of banking services has been the focus of this government. Now, one of the major announcements by the government was 1 lakh post offices to come under core banking system, which will include online transfer of funds between post offices. Now, we are talking about rural and semi-rural areas. And over the last 5 years, Indian economy has been digitalized, and various state governments and the central governments have been claiming that more and more people have been added to the formal banking system. Do you think that this particular budget is in the right direction, especially digital, as far as digital inclusion of the rural areas in the banking system is concerned?
Certainly, I think a few years back we did see apart from digital inclusion, financial inclusion being a part, right? So that goes first, which is to make sure that banking services reach different parts of the world, different parts of the country, and hinterland as well. And more recently, now the digital push has been backed up. So I think apart from the post office connectivity, the other one was also digital banking units being set up in 75 districts. So of course, you and I would perhaps be very quick in transferring money by banking or non-banking channels. But that's not kind of connectivity is not available everywhere, right? So if we were to go to any of the rural areas where the connectivity is not that good, I think a DBU would make sense. And I think that also backs up their overall agenda. So yes, I think these are small steps and being taken because but I think financial and digital inclusion needs to go hand in hand, just purely and as an extension infrastructure as a whole, because we have seen that deeper penetration when you even talk about e-commerce penetration, right? Increasingly now tier 2 cities, tier 3 cities are also becoming extremely active in that space. So I think we have to jump on that bandwagon to take financial modes first, as well as digital. So yes, certainly this budget has taken a step in that direction, but I don't think these announcements are particularly restricted to the budget alone. Besides that as well, we see many progressive steps in this direction.
No, that's absolutely right. Budget is just an opening statement. In fact, last year, in the next 4 months, the entire budget was reversed, considering most of the negative feedback the government received. Praveen, what do you think?
Digital roadmap.
Yes. We can talk about your coffee schedule later.
So, I think the initial trigger that had happened a few years back has already started showing results. And I was interacting with few of retail entrepreneurs, and the numbers are significantly different. 4 years back, if cash transaction was 60 to 70%, now it has moved to 30%, 20 to 30%. Even petrol pumps, which is so cash rich, has those kind of numbers. So if you see in urban areas, it has significantly moved in the direction which we wanted. Now in rural areas, etc., I think the adoption has happened, but it has not happened at that accelerated rate. And there, I think certain initiatives will work out. Now in financial inclusion and in a lot of initiative that the government is trying to do, it can be a focal point where they can be introduced to do it in a digital way. So most of the KYC onboarding, etc., even in rural areas now happens through that. It is a inertia effect and a slight degree of comfort in terms of the way people have used or transacted. So if you look at it, that some elements is a game of patience, because the newer generation are already aware and using it. Certain generation which has not used it are trying. So there is a lot of effort to push them to start using it for the first time. If they use certain number of times, they get comfort in terms of ease of use. Now, the third element which I found in limited group of interaction is the trust issue on digital payment. So broadly, people don't want to share their details because a lot of fraud keeps happening. And if the fraud happens, the normal consumer don't know how to get it rectified. So now certain initiative in that direction has happened, but it has not fully given the trust and confidence to the normal consumers, especially who don't trust, they don't know, and they rely more on a physical exchange of money, etc. So broadly, I don't see a huge trigger in terms of that how this policy will accelerate it, but it is in the same direction. Certain acceleration and those decisions were taken few years back, and the results are there. And if you see, the digital rupee is a very good initiative, but I think the cryptocurrency market and the digital rupee are not cannot be compared. They are two different. They are very different and diverse perspective on which they are based. One is purely blockchain. Blockchain means no single entity can control. Now, this once it's a sovereign currency, then there is an entity which controls it. So pure democratization of the currency has not happened. So though it is the initiative in the right direction, but assuming that it will be able to replace the market of the cryptocurrency is very difficult to comprehend. So it's in the right direction, but it has not substituted the way it is being projected or is being understood by people who are not into this domain of currency.
Sure.
So I think directionally, most of the issues are taken care of. The reaction of the policymakers are not that stop. Earlier it was whenever there is an issue, you just stop those businesses or those entities. Now it is more progressive and proactive in approach. They have tried to regulate, find a way where it can, the good elements of those businesses, including crypto, are used while the misuse can be controlled. So I think that's a very huge change in the way the policies makers are deciding now. Earlier it was, this has created issue, just stop it and close it down. So I think in the right direction.
Fair point. Fair. Sarbvir, I know you have a meeting and you need to leave. So I'll just ask one question to you. One final departing thoughts on the taxing of the digital virtual assets. So-called government subtly, accepted that there is an industry called crypto and it can have effect on the economy. So your departing thoughts, and of course, then I'll pass on the question to the remaining panelists.
I guess, it's very hard to justify why they shouldn't be taxed. I mean, if other assets are taxed, so should digital assets be taxed. I think the larger question is to manage the whole thing in a simple and elegant manner, and I think this is again something that the entire world is facing. Like, how do you tax or regulate a decentralized authority, right? Or a decentralized system? And I think that every government is trying to come to grips with it. There is a natural urge to, of course, tax everything. And I think, to be honest, I don't know. I don't know how this thing will be implemented, how it will be done, because, as you know, if you do something on a Ethereum blockchain or something, how is it exactly reported? Will it be, will it be looked at, not looked at? All those things become very, very difficult to ascertain. Like I said, it's very hard to say that why digital assets should not be, because as you know, otherwise, you see, it becomes a loophole. And honestly speaking, I believe that a lot of crypto is actually a loophole, because what happens is that NFT especially, right? It's like if I want to give something to Roopam, I can, buy NFT from him, right? And, how should that be any different than any other exchange? So I think that's probably the right thing to do. But I do feel that it'll emerge. I think good news, I think, as Praveen said, is that the government is engaging with the asset class and is trying to figure it out, versus saying that, let's just ban it all or something like that.
Fair enough. Government is trying to at least accept the fact that there's an industry called crypto and it employs a large number of people, not only by trading, but also exchanges. Thanks, Sarbvir. Thank you so much. I'll move on ahead with the panel. Radhika, what is your opinion on this subject? Do you think that it should have been followed by regulations first and then on taxation later? Or do you think the government is in the right, the intent is correct? Everything else will follow?
No, I think it's one of the, there have been quite a bit of confusion on what the official stance is on the crypto market in general and trading in particular in the past quite a few months, right? And this is a dilemma that globally most of the banks, central banks in particular, are facing, and national authorities are also facing. In some countries, it's about where the mining activity is happening, and which is very resource intensive. So you've seen countries like Russia and other countries as well trying to stop, even China for that matter, trying to dissuade crypto mining in their own countries. At the same time, you also have the other side, which is basically the trading community, and it's often, while it is democratized to the means that single person can't do anything to the transaction, it is still not under the national authorities. So some of them dealt it by saying that, okay, we completely ban it. We don't want to recognize these kind of trading anymore. Instead, I think India has, while there was initial confusion of what's going to happen, now it's an indication that it's an asset class that's here to stay. We might as well deal with its presence rather than ban it completely. And the way that I think this has been taken is by taxing it. And they also mentioned that, you can't offset this tax against any other income. So essentially this would be seen as a standalone. So I think this is just one of the modes to keep that industry going and rather bring it under regulatory umbrella than to keep it outside and in a black market, so to speak. So I would just say, I think even, and some of the central banks, what you see is that before the private currency space, of course, one can question whether this is a currency of any sort. We should say crypto assets, not cryptocurrency. But to not allow that space to proliferate, most of the central banks are coming with the public sector currency, which is essentially the digital rupee. So it's quite interesting that this is being done concurrently, on our front as well, which is one, to tax them, and two, to bring out legitimate, nationally recognized digital currency as well. So that payment mode doesn't really take off. And one more bit here is that while these crypto assets in particular don't follow any, if it's a stock market, it's one of those listed companies, you can go through the balance sheet, you can see what's happening with the asset. But in these kind of, if you talk about Ethereum, if you talk about Bitcoin, you really don't know where it's going, right? Based on what is the basis of the asset itself. And I think many have been burnt badly because of the 30-40% drop that you have seen. So what this essentially means is that this currency, but we had done an internal study here, and it did show, to some extent, this currency in fact follows what happens in stock markets. So this has some risk, appetite built into it, or risk. It follows risk appetite and broadly as well. So anyway, I digress completely. So coming back to your question, I would take this as a positive, to mean that we don't challenge the presence, but we recognize it and we try to regulate it, rather than treating it as an outcast.
Sure. Roopam, can I buy some NFTs from you?
I think, to Radhika's point, the fact today is that, there are a very large number of Indians, and especially the younger generation, who has invested in these crypto assets. So that, correct, I think is a recognition is I think the first thing. The second is, in my view, this taxation is more a statement of intent than anything else. I think the idea is really here, let's put a tax and then we'll find a way to get it. Right. So I think that's the attitude that it seems to me, because, we don't know the fine print. So we don't know how they're actually going to look at it, record it. And actually, maybe the new tax forms that come out will have something on that where you'll have to declare it. But I think the process of actually recognizing these assets, recognizing the gains, and thereafter the taxation is going to be quite a laborious task. But we have a very imaginative and a very proactive government, so I'm sure they'll come up with something. But clearly, I think for me, the fact that these assets are here to stay, and in an open economy, to ban anything like this would be counterproductive. I think this is a clear recognition.
Sure. Now, this would be my last question to all of you. I'm really running short on time, so I'll just expect a very precise 1 or 2 line answer, because it actually is an answer of that sort. Nandan Nilekani committee had recommended importance of smart devices and instruments like point of sale machines and smartphones for better digital inclusion, especially in the banking system, for the rural economy, for the last mile operator, last mile delivery. But smartphones still attract 18% GST. Do all of you who have been in the industry for quite long, do you believe that there could have been done something on the supply side and reducing the tax structure on smartphones and instruments, which would have promoted more digital inclusion, so to speak? I'll start with you, Radhika.
Okay, this is a very tough question. I think I'll have to just... I think
that's why I said 2 lines.
There are a couple of things happening here, right? So you have mobile phones and then the GST, which doesn't come under the budget. So I think they couldn't have done anything about it. But then again, there are the RBI in general has also seen as offline mode of payments, right? Where connectivity is not required and phones of any kind can work, not necessarily state-of-the-art phones as well. So I think that's the way to go around it. If you want to not look at the GST, not look at the mobile phone, it's just make sure the payment methods can be conducted offline as well. Yeah.
Sure. Praveen?
decision or suggestion would be that yes, it should be reduced, but it should be not generalized again. So there should be some basic smartphones for financial transaction, which is more like a utility smartphone. And that needs to be under special category and special tax or whatever additional costs are incurred on that.
I see. Roopam?
Absolutely, completely agree that the cost of smartphones needs to come down. I think a couple of things which are there in the budget. One is the rollout of the 5G spectrum. So that's the railroad, that is being put in place for actually making smartphones, to be used for all kinds of transactions. Second, which I saw, I think just a bit on that was on the reduction in customs duty on some components of smartphones. So hopefully that is a right step to bring down the overall cost of ownership of smartphones. But clearly I see smartphones to be a very, very essential part of ease of doing business and financial inclusion.
We'll see what happens next year. Praveen, Sinha, Radhika Rao, Roopam, Asthana, and Sarbvir Singh, thank you so much for your time in joining us on Business World for this panel. Thank you so much.
Thank you.